Welcome back, friends. We are about to commence a fresh new week on Wall Street. We have now this week we'll be having good amount of comments coming in from various Fed governors, and you may want to take many of their comments very seriously. So we had early in the morning Atlanta Fed President Raphael Bostic talking that he expects the Federal Reserve to move aggressively in getting back to a neutral rate. So we have the 50 basis points cut by Jay Powell last week, and Raphael Bostic expects that it will move swiftly to a neutral rate, which could be about 3.25%. So that means over 175 basis points cut could happen in quick chops. That's what Atlanta Fed President Raphael Bostic said in the morning, early morning. In another interview, we have Minneapolis Fed President Neel Kashkari saying something which is a little different. Now, he says that he expects the policymakers to dial down the pace of interest rate cuts after last week's half percentage point reduction. According to Neel Kashkari, that we are still in a net tight position. So he said that he was comfortable taking a larger first step, and then as we go forward, he expects that on a balance, we will probably take smaller steps unless the data changes materially. In a decision that came as at least as a surprise, or a mild surprise, I would say, the rate-setting FOMC last week voted to reduce its benchmark overnight borrowing rate by half a percentage point or 50 basis points. It was the first time that the committee had cut by that much since the early days of the COVID pandemic, and before that, the financial crisis in 2008. 50 basis points, by the way, are normally reduced for emergency measures, emergency rate cuts. 1 basis point equals 0.01% for the newcomers. While the move was unusual from a historical perspective, Kashkari said that he thought it was necessary to get rates to reflect a recalibration of the monetary policy from a focus on overheating inflation to more concerns about a softening labor market in the United States of America. His comments indicate that the central bank could move back to more traditional moves in a quarter point incremental increases in incremental reductions in the interest rates in times to come. Right now, he says that we still have a strong, healthy labor market, but he said that he wants to keep it a strong. A lot of the recent inflation data is looking very positive that we are on a way back to 2%, which is the benchmark rate that the Federal Reserve uses. But he says that you're not going to find anybody at the Federal Reserve who declares mission accomplished, but we're paying attention to what risks are most likely to materialize in the near future. Kashkari says that the rate cut, therefore, could be more or less more measured in the near times to come. The rate cut last week, of course, as you know, signaled that the Fed is on its way to slowly normalizing the rates and bringing them back to a neutral position that neither pushes nor restricts growth. In the latest economic projections, the FOMC members indicated that the rate is probably around 2.9%. The current Fed funds rate is targeted between 4.75 and 5%. So that's the way we stand, friends, and should be interesting. Two commentaries, little different in dimension, in complexion, but that they will set the stage for what the monetary policy could be in times to come. We expect the markets to remain in a good mood for and to shuffle between greed and fear over the next few weeks. To get to know more about the US markets, do join our Prime or Prime Plus Telegram groups, which are addressed specifically at forecasting the US markets, the Dow, S&P, and the Nasdaq. For the Indian markets, you can join Premium Value Plus, which gives you a full 1 week prediction of the market, which days, how much the markets can move, and you also get some very good stock market investing ideas. For both, you can WhatsApp us on 982-086-1044. Happy investing. Take care. Bye-bye. And have a great investing day ahead.